Good morning and welcome everyone to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, it looks like we're going to have a good start to the day, but today in the spotlight we are putting a multiplex chain owner, that is PVR, after the company's what seems like a relatively disappointing second quarter earnings. Santo.
I knew you would try to downplay that. Now, PVR has been one of CJ's favorite stock, has always been batting for it for almost 3 or 4 months now. Well, CJ, finally the numbers are there and you can see what the true story out there is really. And I would say that now the steep fall in Q2 numbers clearly at least seems to indicate that this revenge theme that you were so fond of, you would always say that people are coming back to multiplexes with a vengeance. I think that seems to have died down a bit, and now the focus is once again shifting to content. But more than content, I would also think, CJ, that at this point perhaps it's also high ticket prices, the inflation that is now beginning to pinch and making people think twice whether they should indeed be going back to multiplexes. And that said, also the advertising revenues for PVR, as the management had indicated in its call, they have also still a far way away from the level seen during pre-COVID, and it will even by the end of this fiscal, the target is that it would be only about 70-75% of what it used to be back then. So things are certainly not looking well for PVR at this point in time, and that's also seen in the way the stock has performed over the last few weeks. It's fallen very sharply from its highs of 2000 plus levels that it had touched sometime in August.
I think, Santo, I don't know if one could really blame PVR for the sort of numbers, the sort of stinker that the company has really come out with, because I think a large part of the blame also lies on the content creators that it depends on, and that is of course Bollywood and Hollywood. I mean, Bollywood of course has had a terrible quarter. I mean, probably the worst in its recent history. And even if you look at foreign films also, which had also started to gain a lot of traction in the Indian market, even we also did not have many big releases. The only good part of course was that South Indian movies or regional movies, they were able to pick up the mantle for a lot of the the poor Hindi language movies that we have seen. And for me, I think what I would like to focus more on is the fact that Q2 is now in the past. Now I think it's time to look into the third quarter and the fourth quarter, and there are signs that things are looking up. If you look at the management's commentary, they indicated that they have started off on a very strong footing as far as Q3 is concerned, especially because of the success or relative success of Brahmastra in terms of at least driving footfalls and driving ticket sales. Apart from that, if you look at, I spoke about regional movie contribution. It has jumped from about 28% not so long ago to almost 44% in the second quarter, and that clearly is an indication that Southern Indian movies are having a much bigger say as far as box office collections are concerned. And the pipeline going ahead for Southern Indian movies are actually very strong in the second half. And that is what gives me a confidence that probably footfalls will be returning, especially driven by festive demand, but also during Christmas and New Year season. And then, of course, the end of year that usually tends to be a decent, quarter for PVR. Apart from that, my sole bet right now would be that, if you talk about Hindi movie industry, you have movies like Drishyam 2 coming. You have movies like Ram Setu being released, during Diwali. Apart from that, if you look at the Hollywood side, you have movies like Black Panther, which is one of the most awaited movies, recently, and some of the other big names that are coming out. So really, the movie pipeline seems to be very strong at this point of time for PVR, and I would be betting that ad revenues, which have also struggled this quarter, I think they will also probably come back, given the fact that a lot of the advertisement, the companies that advertise, they have, going to be facing a less critical issue as far as margins are concerned. Therefore, maybe be more willing to spend on promotion and marketing.
Well, CJ, I think there is another theme at play right now, and that is clearly the fact that OTC, while
OTT, you mean?
OTT, which has been one of the major factors eating into multiplex revenues, while the managements won't wholeheartedly agree to that, that somewhere is now beginning to pinch. Now, the simple thing is that unless now a movie is really good, people just don't want to come to theaters to watch that. And I think that is probably where multiplexes like PVR are beginning to hurt at this point in time. And that said, this is going to be a very crucial quarter for PVR, given that this is the holiday season. The pipeline at this point doesn't look all that inspiring. It's decent compared to the previous quarter, but still it doesn't seem to be all that inspiring if you speak to analysts tracking that sector. So, we will get to know if people are willing to come to multiplexes, or rather would they wait for some more time if the movie is just about okay and then watch it in the comfort of their homes on OTT.
Yeah, I mean, of course, that has been an ongoing debate, Santo, and especially since the time, the pandemic, when all of us, started getting acquainted to OTT platforms, especially a lot of the, the middle age to, senior citizen level, a lot of the audience there had started to acquaint itself for OTT. But I think still, if you look at the Q2 numbers, if you look at what Goldman Sachs had to say, they believe that the weakness that we have seen in the second quarter cannot be attributed to a structural headwind or a structural shift within the industry, and therefore I think it will be too premature to suggest that just because of one quarter of weak earnings that the company or the industry is facing, or probably we are seeing a very, very big shift in demand as far as consumption is concerned, or the platform is concerned. And let's wait it out. Let's see how Q3 pans out for PVR, Inox Leisure as well, which is going to be merged with PVR not so long from today. So I think we will need to wait for Q3, Q4 and see whether this pattern sustains or not. And only then we will get a clearer picture whether OTT is really eating into the market share of multiplex owners.
Well, for that matter, CJ, even the brokerages which are bullish on PVR at this point in time, even they have started trimming their earnings estimates a little bit.
After a stinker like this, I think, of course, you will have to, if you're an analyst, you will have to rework your Excel sheets and Excel model to bake in the weakness that we have seen, because nobody in a quarter that was supposed to be about pent-up demand, about everybody coming out with revenge spending, to post a net loss in a quarter like this has to be something of a harrowing sort of a result. So I don't think analysts were prepared for this, and therefore I think you could expect price earnings cut. But I think overall, if you look at it from relative performance, given the beating that the stock has taken at least in the past 3 months, I think there is some value emerging as far as PVR is concerned. Well, that is my and Santo's views. You should also let us your thoughts on how you expect PVR to be behaving going into the next 6 months, and you can post your comment with, of course, also your questions with hashtag AskMC. That's it, Santo. Let's move on and look at the trade setup for today. And it looks like quite a good setup. So no disappointments there at least. If you look at the SGX Nifty, it is indicating almost a 100-point gap up opening for the Nifty benchmark. Largely thanks to the Wall Street, the behavior of the US markets overnight, where they had seen a sharp surge on the back of easing concerns around UK financial meltdown. Santo, the new chancellor who came in, he has clearly given a clean slate and taken away all of the concerns that the market had there in the UK government, and therefore that has, at least for the time being, eased a lot of concerns around emerging financial risks from that economy. And therefore I think, Santo, today could be a very, very good session after what was a very good comeback yesterday after making a very weak start.
Well, going purely by global cues at this point, CJ, yes, we do seem set for a very strong start. Now, again, I'm not sure if all the major concerns that are weighing on global markets at this point in time has been fully addressed. So that said, I would still be a little cautious. And remember, you're still seeing foreign funds booking profits at every level. It's largely the domestic investors who are holding up the market. That said, CJ, I'm also a little concerned by the fact that there's too much buildup of positions, retail positions in single stock futures, which is clearly not a good thing when markets are a little iffy. Remember, despite the sharp comebacks, we've seen equally sharp retracements over the last few days as well. So it's still anybody's game at this point in time.
I think, Santo, probably the build-up in positions could also be attributed to the fact that a lot of these individual stocks have seen a good amount of correction, and in some of those cases, those correction has generally been the taking away of the froth. There has not been much fundamental reason behind that correction. Maybe retail investors are seeing some sort of opportunity given the resilience of our economy, given the fact that earnings so far have been quite resilient, even if you can, even if you look at the September quarter earnings, and therefore maybe this is not that much of a concern as you make it out to be. What do you say? Well, next section or our next segment is today about the newsmakers, and on the newsmakers today, a very interesting Gujarat company.
Yeah, Gujarat Gas, and this has to do with the Gujarat government cutting the value added tax on CNG and PNG by 10%. Now, this rising gas prices has been one of the big concerns for gas companies, which is why you have seen almost all the leading gas distributors being under pressure over the last few months now. This move is expected to give some relief to Gujarat Gas, not a lot though, because on the CNG side it has still been, the demand has been pretty much strong, so that is not really going to change because of the cut in VAT. On the PNG side, there could be some improvement there. But at the same time, remember, Gujarat Gas is largely the customer base is industrial. The industries form a major chunk of its revenue. So there is where this move may not really help in a big way. You could see a brief bump up on sentiment reasons early in the session, but most analysts tracking the stock do not expect it to sustain.
Well, thank you, CJ. Thank you, CJ.
Oh God,
wow,
see, that is narcissism.
Thank you, Santo, for that update, of course, on Gujarat Gas. Moving on, the hot brokerage bets today, and I think, you know, Santo, the first name on my list, I think is going to make you a little wary, but I know
it sounds like a stuck record sometimes.
It is, yeah, I mean it is, but I think you can't blame the company for, you know, continuing to deliver and proving you wrong, because the first stock on my radar on the brokerage bets today is Paytm, and this is a note that has come out from Axis Securities very recently, after the company's update for the month of September as well as the entirety of Q2. Now, Axis says that, you know, the very healthy performance that Santo Paytm has delivered so far, at least on some of the business metrics that the company has released for Q2 as well as for the month of September, clearly adds to the bullish case that the stock, you know, brokerage has on the stock. The brokerage has a buy rating with a target price of somewhere around 1,000 rupees at this point of time. Their argument is that Paytm is seeing not only improving, you know, run rate as far as loan disbursements are concerned in terms of the number of loans that they're disbursing, but the average ticket size. I remember that was one of the major concerns that you had pointed out a couple of months ago, that the average ticket size is very small for Paytm, and therefore it will probably not make that much money doing a business like this. But clearly, average ticket size is something that is also improving in the view of Axis Securities. Apart from that, just to give you an idea of numbers, you know, in terms of loan value, Paytm saw 15% jump month on month, Santo, in September alone. That goes to, I mean, these are the sort of numbers that banks would rip your arm off for. But that is the sort of numbers at this point of time that Paytm is able to do. And the general view is that because Paytm is able to leverage its technology, its platform, I think the cross-selling opportunities that Paytm gets from this, and that contributing to the overall margin profile of the company, is where the opportunity lies for Paytm. I think that is what Axis Securities also believes, that with a higher share of financial services in the overall revenue of the company, the contribution margins will continue to improve going ahead, and that should bring a lot of relief to investors who were concerned that how will Paytm fare, given that it had no, you know, experience as far as loan disbursements are concerned. Its average ticket size was so low. Some of the, you know, the customers that it was dealing with, they were probably not of the most, you know, highest of, you know, CIBIL scores or highest of credit profile. So clearly at this point of time, it seems Paytm is slowly and steadily turning around a lot of heads, proving a lot of investors wrong just by doing what it should do, and that is to focus on its business.
Well, and the brokerage report that has caught my attention is an upgrade on ACC by MK Stockbroking. Now, ACC's second quarter numbers were pretty disappointing. So,
exactly my thoughts. After an upgrade after a weak earnings is very strange.
The factors that MK has mentioned is that probably we are seeing the peaking of costs now. In fact, we saw that with Shree Cement also, where the operating margins came under quite a bit of pressure. Now, that is one factor. The other thing is that the royalty payments that ACC was making to Wholesome, that has now that will now end now that the company has been taken over by the Adani Group. And besides that, synergy with the new promoter group is also going to improve its operating efficiency. So these are the three factors. However, at the same time, MK has cut its operating profit estimates for CY22 by 20% for ACC, and also cut the price target to around 2,625 from around 2,900 earlier.
Well, that's it, Santo. Let's quickly take a check at the market, because we have the opening bell ringing, and it seems like a very decent start. We have a very strong start with the Nifty Bank clearly leading the sectoral performers, higher by about 1%. The Nifty index is higher by about 0.8%, while the Sensex is up almost 450 points.
Well, and if you look at the advances to declines ratio, there we're seeing a lot of strength there. Close to about 1,600 stocks are trading higher than the previous levels, and less than 200 stocks down at this point in time. So a strong comeback by mid-cap and small-cap
I think,
stocks.
yes, clearly Santo, and I think it is a continuation of the theme that we saw yesterday. Yes, of course, yesterday the mid and small cap space was lagging behind the large cap space a little bit, but today it seems that it has really caught up to the outperformance of the Nifty 50 at this point of time. Although my only, another thing that really heartens me, Santo, is the fact that the India VIX is really behaving like a good child at this point of time. The volatility index is somewhere in the range of about 18 to 18.5. That clearly shows that investors at this point of time are not really anticipating too much of a volatility shock in the market, which is really a good thing, because that means that there is a lot of upside left in the market, and they are not so concerned about any sort of major corrections of 5 to 10% zone in the near term.
Well, and that said, let's take a look at the stocks on our watch list this morning, beginning with Blue Star. Now, Blue Star has been one of the best performers in the white goods space, up close to about 20% so far in CY22. It's been a very steady performance by this air conditioner player. Now, Phillip Capital has initiated coverage on Blue Star. It's quite bullish on the stock, and among the factors Phillip Capital has listed out is that it's now trying to expand its presence beyond the non-South markets, where it already has a pretty strong presence, dominant presence. And the themes for Blue Star are a recovery in private capex, the PLI scheme, and growing demand for refrigeration in key sectors like pharma, QSR, retail, ice cream, etc. And Phillip Capital sees commercial refrigeration growing by about 18% at a compounded rate over the next 3 years. And other than that, it is into the EMP business also, electromechanic products. And there also the order book of Blue Star is pretty robust at a little over 2,700 crores. And Phillip Capital has a buy rating with a price target of 1,451 for the stock.
Well, clearly, Santo, I think the fundamentals are quite strong as far as Blue Star is concerned. But for me, I think it seems like most of the positives around the stock seem to be baked in. I mean, the stock is not too far away from its 52-week high.
It's at its 52-week.
Yeah, it is almost at its 52-week high. So clearly, it seems like investors have baked in the themes that you have been talking about. But if you look at it from a technical point of view, it does seem like some of the momentum indicators at this point of time are heading into the overbought territory, and therefore I would not be surprised that maybe the stock calms down a little bit. In the very short term, we could see some bit of profit booking happening on this counter, and maybe after that we could see the next leg as the earning execution also comes through.
I think, CJ, there's a bit of recency bias in what you said about the stock having performed quite a bit. Yes, it has performed, but much of it has come over the last couple of years.
Yes, 3 months, I think, yeah.
Yes, so someone who's been holding the stock for almost 5 years, the returns have not been all that great.
True.
So it's just, the stock is up probably just about,
I mean, of course, some of the themes,
some
of the themes that you have talked about, some of those themes have just recently come into the radar, and the capex theme that everybody has been talking about for many years, that has really not played out to the script as far as the Indian market is concerned. But this time around, it seems like it will be different. The dreaded words, but
yeah, it is generally, it's the play is on a steady improvement in market share without losing, without compromising on the margins. And Blue Star has managed to reposition itself as a mass premium product from a premium product, and that too without any much loss in its operating profits.
I mean, that's the credit to the management. That said, the last stock or first stock on my radar today is actually Canfin Homes from the housing finance space. Very interesting earnings from the company. The stock, I feel probably, Santo, will largely react very positively, although the only caution would be the fact that they have not really given a succession plan after the resignation recently of their CEO. But if you look at the performance, very, very strong, net interest income performance, better than expected, better than what analysts were expecting, up by about 31% on a year-on-year basis. Apart from that, if you look at, loan growth, that was also very, very strong, driven, Santo, largely by a 30% jump in disbursements in this quarter. And I think overall also, given the fact that the real estate sector is such a good theme at this point of time, housing demand has been very, very strong, even despite the increase in interest rates that we have seen over the past 4 to 5 months. I think this is one of the housing finance companies that investors ought to keep an eye out on?
Well, pretty much the second quarter numbers would have somewhat improved sentiment for Can Fin Home. It had taken quite a bit of a beating, but that said, there still seems to be a slight overhang, CJ, given the recent developments. The concerns over asset quality, they have now abated somewhat after the second quarter numbers, but given that we are still in a slightly volatile market, investors would be looking for safer bets. So I'm not sure whether they would want to overcome it to Can Fin Homes going by just one quarter's numbers. Maybe most of them would like to watch out for at least one more quarter. Remember, the stock is still a good 10-15% away from the highs which it had seen just a month back.
Yeah, I mean the correction was quite steep after the resignation of the CEO. And we will have to wait and see who the new CEO is, because clearly the management have not given any sort of indication on that front at this point of time. But I think that itself will also be a very good trigger as and when the new CEO comes in, and therefore probably assuage a lot of the concerns that investors have around the company.
Well, the last stock on a watch list this morning is Subros from the auto sector. It's an auto ancillary company and it's a market leader in automotive AC components. It produces for original equipment manufacturers and it has a market share of more than 40%. Now, this is one company which is benefiting from the easing of the semiconductor shortages that auto companies have been battling with for quite some time now. And the other big positive for Subros at this point is that Maruti, which is one of its key clients, has started launching, has lined up quite a few number of new models now. This over the last 4 years, there's been one sore point for Subros since its major client was not launching new models well. The effect was felt on Subros as well, but that has changed. Besides that, Subros is also now supplying to XUV 700, which is also selling like hotcakes at this point in time. And according to Moneycontrol Pro, the valuations are pretty reasonable at 14.3 times estimated FY23 earnings.
Well, I think, Santo, yes, fundamentally things are looking up for the stock, and I think therefore there's not much to argue on that front. But at this point of time, from a short-term technical perspective, it seems like the setup seems to be a little unfavorable as far as momentum is concerned. If you look at the stock, it has recently fallen below its 20-21 day moving average, which generally is an indication of some bit of very, very short-term weakness. So although it is still above its 50-day moving average, it's still above its 100-day moving average, which would be a good indicator as far as the long term is concerned. But in the short term, I think there could be a possibility where we could see a little bit of weakness, especially ahead of the earnings. Once the earnings also come through, then we could see a good traction in the stock going ahead.
Well, and with that, CJ, I think there are quite a few
comments that have come in, and I think one of our viewers, Surya Samala, has been asking for a view on GNFC, Santo. And yesterday we had talked about GNFC, in our evening show, where you had mentioned that there has been a lot of short build-up in the stock. There seems to be a lot of action happening in the October futures of GNFC, Santo. And I think I remember saying that, probably there is a possibility that if the stock goes into F&O ban, you could possibly see some bit of short covering happening, because a lot of the people who have built up short positions, they will have to unwind their positions forcefully, because that is what the exchange mandates you to do, because you can't take any fresh positions. So I think in the near term, the stock could be a tactical bet in terms of getting some bit of earnings. But from a long-term perspective, I think GNFC has been doing a lot of good things. The new management that came almost over 2.5 years ago has been able to turn around the company quite meaningfully, and they are looking into some of the up and coming sectors like rare earth minerals and all those sort of spaces. And if they are successful, if they are able to get into that space, I think the earnings trajectory for GNFC could change very dramatically. But the biggest risk for GNFC, of course, would be the continuation of the current management that has come in and turned around the fate of this company.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed the new format, and we've got quite a few comments on that as well, which we'll take up in the evening show or tomorrow morning.
Absolutely.
Thank you for watching, and please do continue to post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, there's only one place to be, moneycontrol.com. You can also download our app from Google Play or the Apple App Store. And of course, have a great trading day. We'll see you again at 3 p.m. Till then, goodbye.